Hello and welcome to Business Incorporated live on Channels Television. Here are the stories you'll be watching at this time. The Central Bank of Nigeria predicts Nigeria's external reserve is going to hit $51 billion in 2026. Rwanda unveils a $3.2 billion strategy to boost electricity capacity to 1,066 megawatts by 2034. Plus, Lebanon signs deal with Egypt to import natural gas to boost power generation. And it's good to have you join us. I'm Ladi Williams. Let's go to a quick check now. What's playing out with markets that we track? We see oil prices. They're largely steady today as investors are weighing, fading hopes of a Russia-Ukraine peace deal against rising tensions in the Middle East. And we see Brent and WTI, after jumping, previously about 2% yesterday. It did drop earlier today, but now we're seeing an uptick there. Brent crude, $62.28 a barrel, 0.55% up. WTI crude also regaining the $58 level. We see it's all about geopolitics right now. Despite geopolitical risks, traders remain cautious, noting that oversupplied global market, could limit any sustained, price gains there. So that's limiting the gains we're seeing right there. All right, to other matters now. We see gold that's bounced back today, recovering from a two-week low hit amid year-end profit taking that triggered a broad pullback in precious metals, spot gold and silver. So we see $4,363, 0.7% up. U.S. gold futures, that's up 0.8%. Spot silver, wow, what a move this year. $74. Earlier this year, this was trading about that $30 range. $74 towards the end of 2025. Platinum, 1.1% up, $2,132, smashing that $2,000 level. That's for platinum. That was normally trading between $900 to $1,000 earlier this year. Then we see copper. That's down about 2.05%. Palladium, 1.1% down, $1,634. All right, let's look at other top stories right there. Nigeria's central bank, they're forecasting the country's external, that's foreign exchange reserves, will rise to $51.04 billion by the end of 2026. It's about $44 billion right now, reflecting improved economic fundamentals and stronger external inflows. That's according to the bank's 2026 macroeconomic outlook. The projected increase marks a significant jump from the estimated $45 billion in 2025, signaling expectations of wider foreign exchange buffers and reduced pressure on the currency market. The Apex Bank has said that easing FX market pressure through reforms and stronger export receipts should help bolster reserve accumulation in the medium term. If realized, the projected reserve level would strengthen Nigeria's ability to meet foreign obligations, support import cover, and provide a larger buffer against external shocks, a crucial advantage for Africa's largest economy amid global uncertainties there. Also, we see foreign direct investment into Nigeria that rose sharply by about 700% quarter on quarter to $720 million in Q3 2025, up from $90 million recorded in the same period last year. According to the central bank's latest balance of payments highlights for the period, FDI inflows were also higher by 26.3% year-on-year than the 570 million naira posted in Q3 2024. The report shows that direct investment liabilities, which captures FDI inflows into the economy, climbed by $0.72 billion within the period, making it the strongest FDI quarter so far this year. Nigeria's faced structural weak FDI inflows in recent years due to currency instability, policy uncertainty, infrastructure constraints, and security concerns. So there you have it. FDI is there, reaching the highest level in a while. Then taking it on to other African countries now, Rwanda, they've unveiled a bold $3.2 billion energy expansion plan aimed at more than doubling its national electricity generation capacity from around 467 megawatts to 1,066 megawatts by 2034. The initiative, led by the Rwanda Energy Group, is part of the country's long-term strategy to accelerate electrification, expand access, and support economic transformation. Under the REG's 2024-2034 strategic plan, the nation's electricity output is projected to reach that at 1,066 megawatts by that year. Now we see Lebanon and Egypt. They've signed a landmark memorandum of understanding that's to supply Egyptian natural gas to Lebanon's power sector, a move seen as a crucial step in addressing Lebanon's long-standing electricity shortages and reducing reliance on costly fuel oil. Under the agreement, Egypt will supply natural gas to the Deir Amar power plant, one of Lebanon's largest electricity generation facilities. The MOU was signed in Beirut by Egypt's Minister of Petroleum and Mineral Resources and Lebanon's Minister of Energy and Water, in the presence of Lebanese Prime Minister Nawaf Salam and other senior officials from both sides. The natural gas deal comes amid broader efforts to strengthen economic energy ties between Arab states and supports Lebanon's push to stabilize its electricity sector, which has suffered from frequent outages and high operational costs. And the International Monetary Fund and the World Bank have put key loan disbursements to Kenya on hold, citing the government's failure to meet agreed economic and policy conditions, a move that could deepen Kenya's financing challenges as it grapples with a widening deficit and slowing growth. The IMF's decision came after the government failed to meet a suite of conditions tied to economic governance and fiscal stabilization. Among the unmet targets were increases in revenue projection, clearing long outstanding supplier arrears, and executing agreed structural changes to public enterprises and fiscal mechanisms. Kenya struggles to meet multilateral reform conditions. That's come with persistent fiscal pressures, including elevated public debt and tight revenue performance. The IMF's withdrawal of funds and the World Bank's loan freeze underscore the challenges facing Nairobi, daring to discipline macroeconomic policies or trying to sustain growth and social stability. All right, let's get a check on what's playing out with financial derivatives company now with the commodities. We have joining us for this conversation. We have Rosemary here, and we're talking about one of the festive delicacies from Nigeria's southeast, as Isye will see a sharp price surge in 2025, reaching 12 to 13,500 naira per serving, driven by rising goat feed costs and other bottlenecks there. Join us to unpack this now. We have Rosemary Ahira, analyst, financial derivatives company. Great to have you, Rosemary. So, definitely we're seeing another rise at this point. Most of the time we have these conversations, we still see, the prices of some of these staples going up, at this time, even though inflation has been trending downward. How do we explain this one?
Well, the increase in the price of goat meat is likely due to two reasons. So first, Isyewu in itself commands a premium because of the skills and the labor intensity it takes to prepare the dish. So goat head in itself is very tough and it's very hard to cook, very hard to process, very hard to making Isyewu very hard to make at the end of the day. So what people are paying for or why it commands a premium is because of the labor and the skills involved in the preparation process. And secondly, Isyewu obeys the seasonal demand, basically. So during periods like this, during festive seasons like Christmas, Easter, New Year, we usually see the price of this increasing because there's higher demand for it because of festivities and all. So with higher demand, the price definitely go up. But after the festive season, usually in the summer months, we see a supply glut, and consequently, prices of goat meat and Isyewu also comes down because of the increase in supply. And this is because if you look at the goat production circle, the goats are usually giving birth to during the spring months. So during the summer months, where they are 3 to 4 months old, they are ready for the markets, they are ready for the slaughter, and people are not really demanding much during that period. So in January, especially after the festive season, that is New Year period, we should see the price decline, and but it would increase again as other festive periods come on board.
All right, so how can, some of these goat farmers and producers, how can they capitalize on the growing, ready-to-eat market, through, other value-added products?
Well, one problem that goat farmers have is fragmentation. So, goat farming in Nigeria is usually on the subsistence level. So, we usually have farmers producing for domestic consumption, and they usually sell between 1 to 2 goats at a time. So, what I suggest is that they form cooperatives. So, maybe a group of 20 to 30 farmers, each pulling together a fixed amount of goats per every month or every week or as the case may be. And they should have a lead aggregator that collects all of this livestock together and also negotiates with processors or ready to eat brands that are ready to work with them. So with this, there is fixed supply. Farmers are no longer price takers, but yet they benefit from the prices that come from stable supply. But one thing that may hinder this process going smoothly is cold room infrastructure or cold chain infrastructure rather. It's a highly capital intensive project. So this is where we need subsidies coming in to help farmers be able to take advantage of this market.
All right, thank you so much, Rosemary. Hopefully, next year, with the way we're seeing inflation trend downward, most of these staples actually come down, in price. Thank you so much for the analysis there.
Thank you for having me.
All right, let's get a check on what's playing out in the markets. Sitting on the African continent, the NGX there roaring back to the 155,000 level after hitting that level sometime in October and pulling back 0.56% up. That's the intraday trade. So it's looking wildly positive right now. I guess the Santa rally is on. Johannesburg Stock Exchange not left out, 0.48% up. Let's look at other parts of Africa now. See for North Africa, that's the EGX 30, definitely we're seeing also, I think, positive sentiment right there. No, it's negative sentiment. EGX 30, 0.16%, 41,666 points. Nairobi Stock Exchange closing 0.30% down yesterday. Other markets we track now. Let's get a check on the Gulf region. Dubai index, it's negative trade there, 1.49%. Guess the volatility we're seeing in all market there also sipping in. For the Saudi Arabia Qatari index, also down, 1.15% down for the Tadawul Qatari index, 0.25% down. Normally, these markets are heavily dependent on the oil market at this point. Let's get a check on U.S. Futures now. They're relatively unchanged. Overnight, Dow Jones Industrial Average Futures, that's about 1 basis point rise there, 48,753 points. The biggest mover, it's actually going 1, 2, 3 at this point. Nasdaq Futures up 3 basis points, 25,746 points. We saw, investors, trying to get direction, in this market. It's thin trading, so far. That's why we're not getting that much action there. Then in Asia, we're seeing the markets there. Asia Pacific, they're mostly down today after the tech sell-off on Wall Street. That's continued on the AI bubble fears. That's what's driving sentiment there. The Nikkei down 0.37%, Kospi 0.15% down to close. We'll see the Hang Seng Index. That's on the flip side, close up 0.86%. Other markets we track there, just flat closes there for the Nifty 50 and the Shanghai Composite. That's about 1 basis point down. All right, let's get a check on what's playing out in Europe now. We have Lars Holter joining us right there. Great to have you. Lars, how are the markets looking over there?
Yeah, hi, Ladi. Good to be with you. Markets are up here, and I guess that is good news on this last day of trading, really, for the year. But there is not really much news out there. So I guess we're seeing a little bit of a bump because the mood's generally good, but we do have very, very low trading volume, of course. We got a little bit of inflation data coming out of Spain. That's a bit higher than the central bank would have liked to see, but it doesn't even have an effect on markets here across Europe. Like I said, we're seeing a lot of green. The year's over, and specifically looking at Germany and the DAX in Frankfurt, we can say that markets have been doing a lot better than the economy behind it. And you might find that a little surprising, Ladi, because we often, as a matter of fact, for months said how we were in this sideways trading pattern pattern, and that's true. But in the first half of the year, the DAX has racked up some gains. So we're seeing a very good stock performance in pretty much all the European markets, but even with the DAX in Frankfurt up about 20% or so. And now we're just seeing these last couple of points being added towards the end of the year.
Speaking about news, now there's also news out from Volkswagen and regarding their latest electric vehicle models. What can you tell us about this?
Yes, Lottie, indeed, but it's not great news here. Volkswagen will be out with their latest electric car in a few months. They just announced a couple of details here. We're talking about the ID Polo, and that is a small car. And what was supposed to make this car especially important for Volkswagen was the low price point, with the cheapest model selling for 25,000 euros, with the price, of course, going higher if you want a stronger engine, a stronger battery, if you want to have it fully loaded with all the extra features. However, now Volkswagen is saying that when the car comes out in April, the 25,000 euro option, the basic price option, will actually not be on the table at all. Only the better and more expensive option will be available, with the cheaper ones up to 6 months delayed. It's all because the weaker batteries actually come from a supplier. They're not ready on time. And that is obviously a huge disappointment to a customer, especially since the low price point of the model here was actually the main selling point for this entire project.
So how big of a deal is this for Volkswagen? Is this a real problem?
Sorry. Yes, it is, Ladi. Of course, it is completely normal generally that when new cars are launched, that not all models are necessarily right away available. But Volkswagen has gone in on selling this as an affordability option. They really have made a big bet on the 25,000 euro branding, and it's all about, of course, making electric mobility cheaper. So the price point here is key to the whole endeavor, and then not to be able to deliver at that promised price point, that of course is a huge disappointment. Also, even though the EU in Brussels, they've recently taken back the sales ban for combustion engine cars that had originally been planned for 2035. But car makers still have to abide by certain goals, certain percentages of electric vehicles sold. And if they don't get more customers to switch from combustion to electric, they will be subject to fees. So this could well have financial repercussions for the company if they can't get the cheaper cars available very soon.
All right, thank you so much, Lars. So much to unpack there. Definitely has been great, tracking these markets with you in 2025. Thank you so much.
Always a pleasure. Thank you, Ladi.
All right, now let's get a check on what's playing out with the crypto market. We're seeing green on the screen, but with a few pockets of red. XRP, XLM, yeah, they've been following each other for the longest time now. But generally, we're seeing green in the market there with some recovery with Ethereum, Bitcoin 0.74%, 87,000, still sub 90K, looking like we might end the year at this price levels where it's going. But let's look at how Bitcoin started off the year. $95,000, that was the starting price. Then in between, what played out from here to there, $126,000, that was hit. All-time high, that's for Bitcoin, was lost that level. Trading now, 87,000 level. Year to date, that's 8.4% now. So nothing has changed really, ending the year at this level. But we'll see if there's some kind of flip, before the year, runs out. This trade's 24/7, so anything can happen, in this market. But that's it. There you have it. That's the move we've seen this year in 2025 for the price of Bitcoin there. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon. Great to have you.
Yeah, Ladi. Good afternoon, Ladi.
Yeah, so I don't know. I guess some investors might be disappointed with how Bitcoin has performed this year. It's supposed to be the digital gold, but we've seen what gold did this year. Why is Bitcoin lagging?
Well, for obvious reasons. We know BTC is far more volatile than gold when you look at historically how Bitcoin has been performing. And we also know that gold is a bigger market Yeah, the bigger the market, the more stable it is. So Bitcoin is still in its early phase. I strongly believe that over time, Bitcoin will perform much, much better. And we are hoping that next year we'll see a new all-time high. And whereas for gold, the last about a year and 6 months has been very, very amazing for gold. So we'll see how it plays out while the market cap of Bitcoin continues to increase.
Right. So, in your opinion, what have you seen so far this year in a market that has kind of impressed you? Which coins are out there that you think, have done better or outperformed Bitcoin or the general market so far?
I think DeFi has stood out. DeFi performed very, very well. And we are beginning to see like a huge rebrand too for most DeFi projects. Then I also think DEXs, you get DEX tokens, Hyperliquid, Asta, Aventis, and a whole lot. They also performed really, really well. Also layer one blockchain, Solana, Binance Smart Chain, Ethereum, they've actually performed really well. So truthfully, 2026 is going to be like a very, very huge year for the crypto ecosystem because we'll see lots of institutional investors. We'll see like government frameworks that would shape how this market would be presented to all investors and will bring some form of stability. Also, I'm eager to see tokenized stocks being traded on crypto platforms on the blockchain, basically, which would also be very interesting. Imagine the stock market being traded 24/7, just like Bitcoin. So lots of value would be captured on the blockchain come 2026, and it's something to be looked out for, basically.
Right. But would you generally, say 2025 was a quiet year, for the crypto market? It was more of so much talk from presidents in the U.S. We did see, Bitcoin rally, up to President Trump's, getting into the White House. But it's been much quiet, since then, for this market. Are you seeing the same thing play out, in 2026?
So personally, I'm expecting the first quarter of 2026 to be filled with lots of pumps. January, February, probably March, I'm expecting some pumps. Most likely, we would see BTC go above 110K, maybe a new all-time high within the first 3 to 4 months. But afterwards, I'm expecting to see more of consolidation and distribution in the markets. And also, I have huge expectations for altcoins. Altcoins that have some solid utility. I'm expecting a whole lot from them come next year, especially now that most companies are beginning to form like a basket of crypto tokens that they're holding in their portfolio. Yeah, so it's something exciting to see how this would actually play out in 2026. But it will bring lots of stability to the price of lots of crypto projects.
All right, so much to expect in 2026 for the crypto market. I guess regulation might still trickle in to 2026. Thank you so much, Solomon Monday, for breaking it down for us. Thank you.
All right, Daddy. Thank you.
All right, let's look at some stories now in the market. We see the Central Bank of Russia. They've updated the rules governing investments in Russian digital financial assets, as DFAs. The regulation concerns products like tokenized real assets, digital rights, purchased by professional and retail investors on the domestic market. The regulations apply to DFAs as defined by the Russian law on digital financial assets from 2021, which covers instruments such as tokenized securities and other real assets, as well as digital rights. Unlike cryptocurrencies, these products are issued on private blockchains managed by operators approved by the CBR, although the bank intends to permit their circulation on public networks next year to help Russian companies attract foreign investments. They're also seeing tokenized equities are rapidly emerging as a meaningful segment of the crypto market. According to data from Token Terminal, the combined market value of tokenized stocks has reached an all-time high of $1.2 billion. This growth reflects growing confidence among both retail investors and institutions, bringing on-chain equities closer to the structure and scale of traditional financial markets. Then we're seeing Metaplanet. They bought about $451 million worth of Bitcoin. The Japanese Bitcoin treasury firm Metaplanet announced that the company has acquired 4,279 Bitcoin. during the fourth quarter. According to an expert from the CEO, Simon Gervich, the company spent $451 million in the period to buy Bitcoin at an average price of $105,000 per Bitcoin. So they're in loss right now. In total, Mental Planet now holds 35,102 Bitcoins, accumulated at a combined cost of $3.78 billion, or an average price of $107,000 per Bitcoin. So definitely, we've seen those companies, buying all of this Bitcoin, but now seeing the price movement, are they going to buy the dip? At this point, that's a big question. So much to unpack. Still, the few trading days of 2025 is technically almost done at this point. Definitely, we've seen a lot of assets outperform and some quite the laggards. We'll get a check on what to expect, going forward into 2026. Who's going to shine in these markets? Thanks for watching Business Incorporated. I'm Lade Williams. Bye for now.